If you keep on doing what you've always done, why would you ever expect anything to change? My friends, each and every day, if you would just practice, learn by doing, improve each and every day, just a little bit. And the way that happens is we put the videos online. If you're a subscriber at chartingwealth.com, you get a video every day. Study those videos. Learn how to use volume to tell you how strong price movement is and if it's backed up by anything but manipulation. And once you're able to team up volume with your Heikin-Ashi candlesticks and your trend lines, that's all you need. You see it over and over again and again. You look for the perfect setups, and those are what you trade. Unlike professionals who have to trade, we do not. We wait for the perfect setups. I'll show you one in just a minute. Close to perfect. Let's start where the markets are at this point. S&P's up just a little bit, and we'll start with it. Again, we look at where we are today as compared to last week. We're going to check that out on the weekly chart first. We see the high last week was 555.05. This week 557.18. So we're up a little over $2. We can see on the latest 2-day chart that has already closed, we're nicely above the weekly trend line. We're sitting right there on it with a nice green candle on top with a little bitty wick there. We don't have average volume. The volume's actually been decreasing over these last 3 candles. We had a lot of indecision as the market looked like it could have topped, but then popped off again. Of course, as we've been telling you, we have stayed long this whole time. We see where things up in the morning, a little off in the afternoon, and again, just up 0.09% for the day. The half-day chart is also well above the weekly trend line. Let's look at the NASDAQ 100. This is the trade that we made, and I will show you we had the interim low with higher than average volume, sort of a dead week. It's okay to have those in. That's why I said this trade wasn't perfect, but we did have the nice turnaround marker. I love a small spinning top. I don't like huge wicks on the top or bottom or big green up candles with long wicks because they're dangerous. The market can pop up that week and then just never recover or move down and again give you a big loss where you have to pull out. So again, I'll look for the perfect setup. This was close to it, and of course it has been great for us. The worst point you could have jumped in that first week, 435.79. Of course, this week the high 500. So is 435 all the way up to 500? Is that a nice gain since the week beginning the 29th of April all the way to the week beginning the 8th of July? Yeah, I would say that's a pretty nice gain. And again, it's been a pretty easy gain. We got a little iffy right in here after the week beginning the 20th of May. We got in that week the 28th. Looked like it might be topping and rolling over, and then it just took off again. Haven't had a lot of volume helping us out here. But again, it's the summertime trading zone. It's the suckiest trading zone typically ever. This has not been one of those sucky summers. Why? Because, of course, the governments are printing money backed by nothing, and everything's inflating, and it just keeps going up, 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 up. Which, again, if you have real stuff and you have more dollars chasing the same stuff, then, of course, real stuff becomes worth more. That's what inflation is, no matter what the talking heads of the politicos tell you on television. Inflation comes from printing more money backed by nothing in fiat currencies. It's the way it's always worked. Don't be an idiot. Just watch it and, again, trade off of it. At some point, that balloon will pop. And then, of course, maybe Bitcoin, maybe gold, maybe inverse funds. We'll see. But this is the reason you train, because when it gets critical, you want to have options. Again, NASDAQ up 0.06%. Let's keep moving. I am on a boat at sea, and it's going to take a while to upload this. Also, I'm not going to be able to get up the WordPress page at the chartingwealth.com website until maybe midnight, about the time we get into port and I can get a land signal. Then I'll be able to upload, because I'm being blocked by the way that the servers are set up for the satellite service that we have. So anyway, just technical crap. But we look at where we are on 20-year U.S. government bonds, down 0.55%. Of course, we had a big down two-day candle representing Monday and Tuesday of last week, 1st and 2nd of July. Then, of course, that Wednesday, Friday candle, because we had July on 4th on Thursday. We had a doji, and this latest one trying to move back up. But again, you can see where we had 3 days of up movement, and then we have the down day coming. Still have that downward pressure potentially from last week. We don't have a trade here. There is nothing to trade here. There's no volume to confirm anything. So we're just watching, waiting for bonds to reset and give us something to trade. What's up with gold? Gold up for the day just barely 0.22%. Maybe we're moving up again to bounce off the ceiling that we've seen bounce gold off twice already. Don't know. Again, don't have volume confirming any kind of move on the weekly. Remember, we trade off the weekly chart with weekly vertical crossovers. Don't have anything like that. So we'll continue to wait, watch, and see what we can learn from this. No idea where gold is going at this point. Hopefully, at some point, it will let us know. I'd particularly like to jump back into a nice run-up in gold. That would be nice, and I would hope that the volume would tell us that's happening. But again, this is the lightly traded time of year in the middle of the summertime trading zone. Let's move on. We'll go to HODL, H-O-D-L. A bit of a rebound you can see today after lots of down movement in Bitcoin. You see things popping up, some 2.36%, about a 14% or so down. So recovering 2.36% is not that much. But of course, we will keep an eye on things. Still a lot of downward pressure here. The low in that prior 2-day candle, let me move this blue line out of the way so we can see a little better. The low was 62.67 last week, 62.24 this week. So we are hitting a lower low. And again, Bitcoin moving in the right direction, which is down. We want to see it reset. We want to see it turn back over at some point. But you know what we really want? We want volume to follow that turnover so that we can read it. We'd love to have high volume, or at least average volume, with an interim low, and then things rotate around with a green spinning top with average or higher than average volume and give us a real signal for a takeoff. Maybe that's coming. But we're still short Bitcoin, still in our BITI. We're still watching it. It may be ending. Again, Bitcoin can end abruptly. It's been very good to us, 14% or so. And again, we'll let these charts lead us. That is where we are. So good to have you with us always. You have questions, problems, concerns, don't hesitate to reach out to us. CW at chartingwealth.com. God bless, my friends.